Welcome to the third edition of Common Sense for America. Today we're going to focus on an issue that screams for common sense. That's the American income tax system. Americans have always been very sensitive about taxes. In fact, we remember the phrase, no taxation without representation, which led to the revolution itself. The American income tax is something of an accident, in that it was created by a constitutional amendment ratified in 1913. But it wasn't really used at all until the Prohibition Amendment was enacted in 1919 and put into play in 1920. When that act went into play in 1920, the liquor taxes dried up. I apologize for the pun. But the United States government was heavily dependent on liquor taxes to support its operations. And without those liquor taxes, they looked for another source. And they looked at the income tax without any idea of how big the American economy was, how it operated. They just said, let's try the income tax. And they were amazed. They, the Congress, was amazed at how the money flowed in. And they got addicted to it like that. Now, they've been tinkering with the tax ever since. My number one objection to the income tax is that it is by definition a tax on productivity. Every economist will tell you that the two things you must have for a growing economy are increasing productivity and a growing population. So taxing incomes is a direct tax on productivity. And we all know the more you tax something, the less you get of it. And so the income tax is kind of, and I don't fault the Congress of 1913 and the people of the government that instituted the tax heavily in 1920. I don't fault them because they didn't know. But the income tax is probably the dumbest tax we could come up with for the United States economy. Now, Congress has been playing with the income tax ever since it was enacted. The money just rolls in, and as I said, they're addicted to it. Today, we have over 2,600 pages of tax laws. And if we add in the regulations enacted by the IRS and the Treasury Department, we're up to 9,000 pages. Now, this is why most Americans feel like to get a fair shake from the tax system, they have to hire a tax professional. Now, most of those tax professionals read the tax court reports, and if you add those in, now we're talking 70,000 pages of laws, regulations, and legal opinions that affect how we Americans pay taxes. And that's why the average American feels like they're in an adversarial position towards the federal government when it comes to taxes. And they feel like, the average American feels like, that only the rich who can afford the best tax representation get a fair shake from our tax system. And they feel like, every time they pay their taxes, that the government is robbing them blind. Now, the tax system has gotten worse since the government, in well-intended actions, they thought they were doing a good thing, made the tax system a progressive tax system, meaning the higher your income, the higher percentage of taxes you pay. Now, this is an even more egregious attack on productivity. Why would anybody who understands economics do such a dumb thing? Well, it sounded good to the American public that the guy who makes more money than you should pay more tax than you. Sounded pretty good to them. And that's why the Congress was so quick to jump on this, and of course it raised tax revenues. But it's a terrible thing for the economy in the long run, and a terrible thing for the individual taxpayer in the long run because of the indirect effects of the tax on productivity. Now, this tax system confiscates taxpayer's money before he even sees it. Your withholding, which is required by law, takes the money out of your paycheck before it even hits your bank account. You don't have anything to say about that. Now, you can manipulate the system a little bit to try to keep more of your money and then fight to hold on to it on April 15th. But in reality, the tax system takes your money whether you like it or not. They confiscate your money. Now, in doing so, they reduce your spending power. Now, our economy is a 70% consumer spending economy. So reducing the taxpayer's spending power is a very foolish thing to do for the economy. Second, it reduces the taxpayer's ability to accumulate capital. Capital they might use to start a business, to buy a house, buy a car, pay off their credit cards, send their kids to college. This capital formation is a critical aspect of any economy, and our tax system is working against that in a big way, because before you even see the money, the federal government has taken it. So these have negative effects on the overall economy. Now, I believe that this adverse tax system, while it's been very good at raising revenue for the government, has held our economy back to the point where we're saying, well, gosh, a 2% growth in the economy is okay. 2.5% is great. That is not true. We see plenty of economies in the world growing at more than 2.5%, growing at 5, 6, 7. China talks about their growth at 5 to 7%. There is no reason that our economy cannot grow that fast, and the big reason it's not growing that fast is because our tax system is so bad and it's holding us back. But it doesn't have to be that way. We can fix this tax system. We can make these flaws go away or mitigate their negative effects on the economy. First, we scrap the whole tax system, the whole 2,600 pages, the whole 9,000 pages of laws and regulations. We scrap it all and say the first $50,000 that you make in income is exempt from tax. Now, if your wife works, she's a separate taxpayer. First $50,000 of income she makes is exempt from tax. So your household could make $100,000 of income and pay no tax. Now, in return for that, there are no other deductions, no other exemptions. Your home mortgage interest deduction is gone. Your deduction for your dependent children, gone. All of that is gone. What you have is a $50,000 exemption, and if you add your wife who also works, another $50,000 exemption. You have $100,000 that you can earn without paying any tax, and nothing will be withheld from your paycheck unless and until you exceed the $50,000 exemption. Now, at that point in time, we would all pay the same tax rate. Now, the Office of Management of the Budget, the Congressional Office of Management of the Budget, recommends a tax rate of 25%. In their infinite wisdom, they decided that was the tax rate that would maximize the tax revenue without impairing the economy, and that especially applies to dividends and interest and capital gains. T was a very, very big deal in the Revolutionary War time. And keep in mind that the organizers of the Boston Tea Party and of the revolutionary fervor in Boston in 1773, 74, 75 were themselves smugglers. They made most of their money trying to avoid the taxation. Whatever taxes were paid by legal operations, they smuggled goods in, particularly rum and tea and other items, silk, fabrics, etc. John Hancock, who famously signed the Declaration of Independence in the biggest letters possible, was the #1 smuggler in Boston, Now, he was a legitimate businessman, but he augmented his income with smuggling. And Samuel Adams, his partner in the revolution, was a tavern owner who was a tremendous smuggler of rum. He sold rum in all of his taverns, and he didn't want to pay what he thought were the egregious British duties on the rum. Now, these guys, along with their Confederates, Paul Revere, I'm blocking on the names. There were two other Confederates who were the Revolutionary Cabal, were initially thought by the British authorities to be merely an organization of organized crime. They were not thought to be revolutionaries. They were just thought to be an organization of smugglers to be caught, prosecuted, and imprisoned, if not hanged. Now, the Boston Tea Party started, its original origins were, hey, I'm a smuggler and I don't want to pay these taxes. But by dumping the tea in the water, they didn't steal the tea and sell it and evade the taxes. They dumped the tea in the water. They were making a political statement heard all the way back in London that we're not going to pay these taxes and we're not going to take this anymore. Now, it's interesting that at that time, the revolutionary fervor was limited to Boston. It didn't really exist in Philadelphia or New York, and it certainly didn't exist in Savannah, Georgia, and Charleston, South Carolina. It was very much limited to Massachusetts and particularly to Boston. It grew from there, largely in response to a pamphlet written by Thomas Paine called Common Sense, hence our name, Common Sense for America. But inflation has made taxation a bigger and bigger issue for us. And today, we can fix our broken tax system, which is an accidental result of many decisions, none of which were clearly thought out. Our tax system today is basically an accident of a 1913 amendment, then a 1919 amendment creating prohibition and enacting that in 2020, and a Congress that was desperate for replacement revenues and didn't know what they were doing. And they've been tinkering with the tax system ever since. They've been tinkering with it to A, increase revenues, and B, to placate an electorate that hates paying taxes. That hasn't changed since the Revolutionary War. The American public hates paying taxes. Now, they don't really understand all the nuances of the income tax and its tax on productivity. The typical American doesn't think about that. But every time he looks at that paycheck and sees how much money went to the federal government for income taxes, he's hot under the collar. And when he has to fill out this voluminous, multi-page tax return to fight to get some of his money back on April 15th, he's really angry. And this is why most Americans feel that the tax system has made the federal government their adversary, created an adversarial relationship between the government and the citizens, something that no government should aspire to have. A government should aspire to have a positive relationship with its citizens, and especially its taxpayers. And we can create that by changing this tax system. So I've talked about creating a $50,000 exemption for each taxpayer. And if your wife works, she gets the same $50,000 exemption. Now, I would increase that exemption over 10 years to $100,000. So you have a $100,000 exemption, your spouse has a $100,000 exemption, your household can earn $200,000 before paying a single dollar in tax, before anything is withheld from your paycheck. Now, in return, you don't have any other exemptions, deductions, nothing. You can fill out your tax return on a single page, maybe even on a postcard, for crying out loud. Now, everybody likes that idea. The other interesting aspect of this is that the tax rate you would pay after exceeding the exemption, again, the Congressional Office of Management of the Budget suggests it be 25%. The beauty of this is it's a single tax rate. It's the same for you as it is for a multimillionaire. It's the same for the factory worker as it is for the hedge fund manager. It's fair. It's the same for everybody. And nobody can say, well, I got screwed because I couldn't hire a professional tax preparer. That won't be the case anymore. Everybody will be treated the same. Now, the beauty of this system is that it corrects all the flaws of the current income tax system. Number one, the money you earn stays in your bank account until you exceed the exemption. So we are accumulating money, we're accumulating capital, and that money can be used however you want. You can spend it to pay down your credit cards. You can use it to buy a new car, buy a house, send the kids to college, start a business. That is a very important aspect of growing the economy. We're growing a consumer economy. Our economy is 70% consumer driven, but we're also growing the economy with capital formation. That capital formation creates jobs. In our consumer economy, to the extent we are spending that, we're creating jobs. So we're growing the economy by the simple creation of capital and consumer spending, creating more jobs, more opportunity for more Americans. And a job means an American can pursue the American dream however they define it. Now, the other aspect of this is that people who are not working today are going to be more inclined to come into the labor market and work because they get to keep their money. They get to keep the first $50,000, and in 10 years they'll get to keep the first $100,000 that they make. They're much more inclined to come back into the labor market and work. Now, this is an increase in what we call the labor participation rate. The increase in the labor participation rate can have a very, very positive effect on our Social Security problem and our Medicare, Medicaid problem. Funding those two programs is a real problem right now. The more people that come into the workforce, the more people are paying those taxes. We've helped solve those problems. We've also put people to work in a positive way. I mean, they're not sitting home on the couch, eating Fritos and drinking beer. They're working, and that's very healthy for them. It's very healthy not only for them physically, but for them mentally. All of this is very, very positive. The other aspect that is really good for the economy about this is that the tax rate and the tax system that I described can be the same and doesn't have to change. Right now, the federal government is constantly tinkering with the tax system. Every year there are some changes to the income tax system, to the corporate tax system. That uncertainty is very, very bad for the economy in that nobody likes to invest in a environment of uncertainty. This system could be the same forever, and we don't ever have to tinker with it again. And everyone can feel good about this system because it's the same for everybody. Whether you work for a great big company or a small company, or you work for John the grocer, the average employee has to tell his employer how many exemptions he has, and that determines how much money is taken out of his paycheck, every paycheck, whether he likes it or not. Now, if he goes overboard and uses too many exemptions, he's going to owe the federal government a heck of a lot of money on April 15th. If he doesn't take enough exemptions, the federal government's going to take a huge amount of his paycheck, and he's not going to be able to make ends meet. And the reality is that the lower half of our economy, from the middle class down to the poor, when they get their paycheck and the government has taken out a significant portion of that, it makes it very hard for them to make ends meet. My son makes $58,000 a year. And I had a conversation with him this morning, and he said, look, I have a 700 square foot apartment, costs me $900 a month. By the time I pay $100 a month for electricity, $100 a month for my phone, $100 a month for my car insurance, and $900 for my apartment, I don't have much money left. He said, that's why I'm an expert at buying groceries, because I have to stretch every dollar. Now, he makes $58,000 a year as an individual. That's about $10,000 more than the median income in the United States. So you see how the tax system really strains the average individual taxpayer and the average individual family. It really is a strain. And it doesn't have to be that way. And we shouldn't be taking money out of people's paychecks so prematurely. Instead, we should be letting them keep their money until they exceed an exemption. And then we start taking money out of their paycheck because they have exceeded the exemption. Now, keep in mind, the average household income in 2023 in the United States was about $93,700. And the individual median income in 2023 was, I think, about $48,000. So a $50,000 exemption growing to $100,000 over 10 years would exempt from taxation an enormous percentage of American taxpayers, giving them their money back, putting money into their bank accounts, allowing them to spend money on groceries, on school supplies for their kids, clothes, whatever they need to, and to put money away in savings for the things that their long-term plans and gains. Small businesses, particularly sole proprietorships and small corporations, pay a very heavy burden of taxation through the corporate income tax. And that's money that they would otherwise put into their businesses. That's money they would otherwise invest in growing the business, and if they grow the business, they hire more people. That's money they would otherwise invest in buying more equipment, which helps another business get better. So this income tax system that we're talking about cuts through all phases of the economy, but it's especially oppressive on the middle and lower income classes.